Electrical permits range from $50 to over $2,000. Because these costs are difficult to reconcile manually, the average electrical contractor loses between $8,000 and $15,000 every year in unbilled permit fees. The leak starts with a typical field purchase. A technician pays for a panel upgrade permit at the city office using the company card or cash, files the paper receipt in the truck, and moves to the next job site. This timeline identifies the dead zone, the gap between job completion and bank sync. For rush jobs, work is billed before the card transaction even posts. At 200 jobs yearly, missing 1 in 5 permits mathematically guarantees $10,000 in lost revenue. Human memory cannot reliably track 50 or 100 active projects at once. To stop the leak, we will deploy an AI-driven monitoring system that captures expenses at the point of purchase and anchors them to the job automatically. Before the AI can route these costs, it requires a specific destination in your chart of accounts to deposit the data. Inside the QuickBooks chart of accounts, we start by creating a new sub-account under Job Expenses. We label it Permits and Fees. Next, navigate to the Products and Services menu and create a new service item specifically designated for electrical permits. Keep the sales price for this service item at $0. The AI will dynamically override this value for every invoice based on the actual transaction amount extracted from your bank feed. This diagram illustrates the secure connection between the local Python environment and your QuickBooks database. By running the authentication script, we generate a token that allows the system to monitor bank activity and update invoices without manual entry. Establishing this infrastructure ensures the AI has the permissions and categories it needs to manage permit costs without human intervention. With the foundation set, we use a permit classifier script to teach the AI how to identify a permit purchase within a stream of raw transaction text. We feed the system historical bank data. Claude reviews strings like Austin Dev Services to separate permit from non-permit categories. Once trained, a monitor continuously scans your feed. Identifying a permit, it cross-references the municipality, date, and electrician to match the corresponding QuickBooks project. This triangulation eliminates the need for accountants to chase down technicians for receipts. Every expense is tethered to its proper project the moment the transaction is detected. Let's look at the system in action by pushing a simulated $225 credit card charge from a city permitting office into the bank feed. The terminal shows the detection in real time. The AI classifies the transaction as an electrical permit and assigns a 96% confidence score. Because the match exceeds our confidence threshold, the system auto-approves the transaction and writes the expense directly to the customer's active job profile as a billable cost. Now, when the office manager opens the final invoice for that customer, the background work is already finished. Looking at the finalized invoice, the permit line item has been automatically added, including the municipality name and the exact $225 cost. During the first week of operation, you will use supervised mode. This allows you to manually verify any matches that score below the confidence threshold, while the AI learns your specific data patterns. Once supervised mode is complete, the entire process runs in the background, reconciling costs before you ever open the draft invoice. This workflow saves roughly 40 hours of reconciliation work annually and recovers thousands of dollars in costs that would have otherwise been missed. Operating without this automation guarantees ongoing revenue leakage that is difficult to spot through manual audits. With permit recovery secured, we can apply this same logic to your other variable costs. In the next module, we will automate the categorization of subcontractor and material expenses. Mastering automated cost recovery is the first step toward verifiable job costing and ensuring every project reaches its full profit potential.